Hello everyone, great to have your company on Kalkine TV. I'm Sage, you're watching the Buzzing Trends, and today we'll be discussing why Fisher & Paykel Healthcare's share price went up 6% this morning. Fisher & Paykel Healthcare's shares surged by 6.02% in the early trade today, after the company said its first half profits were nearly in line with the previous year amid the robust demand for respiratory machines for hospitals. And the healthcare firm also said that a rise in transport costs last year continued to remain a headwind, but had begun to cool down. Another headwind for the firm was the slowed demand for its breathing aids used to treat COVID-19. And for the 6 months to 30th September 2021, Fisher & Paykel Healthcare delivered New Zealand $900 million in operating revenue, down 1%, and New Zealand $222 million in net profit after tax, down 2%. The company's hospital operating revenue came down 2% to New Zealand $670.2 million, while the home care revenue was up 0.3% to New Zealand $226.9 million. Hospital product groups, including humidification products used in respiratory, acute and surgical care, mainly weighed on the company's performance, and the company's hospital operating revenue came down 2% to New Zealand $670.2 million. And since early 2020, the company has been experiencing increased demand for its breathing devices as hospitals were in a hurry to stock up on available machines. And with an overall containment of the virus, the admissions in the hospitals have slowed down, and so have the profits. Despite that, the company continues to see growth in certain areas. And within the hospital product segment, consumables revenue rose 8% in constant currency and reached 67% of segment revenue. The remaining 33% of revenue was from the sale of hardware. On the other hand, home care revenue was up 0.3% to New Zealand $226.9 million. Despite a rise in freight costs, the company delivered a 135 basis point rise in its gross margin to 63.1%. And the company said elevated freight costs and air freight utilisation continued but were lower than the same period last year, impacting the gross margins by approximately 190 basis points compared to pre-COVID-19 levels. Comparing the situation with the first half of the previous financial year, the company's managing director Lewis Gradden stated that the first half of the last financial year was a period of extraordinary demand during the initial surges of the COVID-19 pandemic. And despite that, he stated that the first half results of financial year 2022 have been strong. And now let's talk about the company dividend. The company's board announced a dividend of 17 cents with a record date of 3rd December 2021. And Fisher & Paykel anticipates paying 700 million New Zealand dollars in land and buildings in the next 5 years, including a 5th building to complete its Auckland campus, the company said. So what is the outlook for the firm? Fisher & Paykel Healthcare's Managing Director and CEO Lewis Gradden warned that the second half could be tough. And Gradden said that for the second half they expect the hospital hardware sales will continue to be impacted by COVID-19 related hospital admissions. However, as they said in the August trading update, many countries have already boosted their hospital treatment capacity. So Fisher & Paykel's Healthcare do not expect hospital hardware revenue to continue at an elevated level for the rest of the year. And the company's stock has risen by 6% to a value of $32.08 Australian per share. The company's market capitalisation stands at about 17.82 billion Australian dollars. And thank you for your company on the report. That's all for now. We'll be back soon with our Buzzing Trends show to share the latest market insights with you. Until then, stay tuned to Kalkine TV for more of the stock, business and economy related hot trends. Sage signing off.